Hello, Warriors. How's everyone doing? Hugo, Brock, Richard, everyone doing okay?
Morning, Dale.
Hi, how are you, Ryan?
All good,
So,
mate, you?
huh?
All good, you?
Good. I saw a news story that even if you were bad this year, that Santa can't afford the coal to put in your stocking. So you're okay, no coal in your Christmas stocking this year. It's
No,
too
just
much. Huh?
stones and mud. Stones and mud.
Anyway, the smartest thing I did was cover my short positions Monday in the NASDAQ. Yesterday morning, it didn't feel so smart, but the whole reason was I was looking for this to be an important breakdown here. And when there was no follow through Monday, I just went with it and said, I don't know, I've been with this position for a while and we've already had a 8% pullback. So I know the bears are going to be looking for sales in here. Still thinking there's lower numbers, and there could be, but I'm open to new highs into year end. S&Ps maybe 4,700, 46, 4,700. When you look at this right here, it really wasn't that bad. Yeah. So, I could be wrong, and I'm not long for it now. I'm not, I'm flat going into the NFP tomorrow. So, what I'd like to see is one more high in the yen. Okay, this could be a failing rally. The yen and the dollar look somewhat similar. And I think we'll get a new high in the dollar to fade. And I think that's going to be the reason that the market could do it. I mean, if we're just going to straight line to 96, then I'm wrong. But if we rally to above this high on maybe a decent NFP number and fail, a weaker dollar, pulling back to 93 and negating this breakout would be exactly what the market would need to accomplish that by the end of the year. So that's my take on that. So I'd love to see a rally on the NFP and the yen. I'd actually like to see new highs because I've been waiting for this for a long time and I missed it up here. But we have an inside week in the yen and an inside week in the dollar. So we'll see. Maybe we could pull back into the 91 zone over the next several weeks or a couple of months, maybe even 91, and then have the big dollar move. So I'm hearing that the Democrats want to move the debt ceiling extension to February. That's when the Winter Olympics are. 94 will be hard to break. Okay. Well, I'm just saying that based on what I see RSI wise, what kind of high is this in the dollar? I know there's a little divergence here, but look at these readings, right? 82. So I think we're going to take out the stops above this high, maybe tomorrow on the NFP. So Ryan, now how are you besides conducting the game show, guess the NFP number? Do you just kind of stay flat for a big number like that and then react to it, or do you carry positions into it?
Yeah, it all depends really. If I've got positions in that have got a decent bit of margin on them, then I'll just manage them with the stops and that, widen things out, try and get over the noise.
Okay.
If I'm close to the market price, if I'm in a short-term scalp or something like that, I might fold it up and wait until after.
You have a view on the dollar here?
Yeah, it's well, we've had a little bit of a change from yesterday. It's all's right with the world today. You know, there's goldfish thinking again. You know, yesterday was all a bit of a risk off. The world is ending. You know, now US-China tensions are seemingly sorted. Debt ceiling sorted. Gas crisis is sorted. You know, UK fuel problems is sorted. Higher oil prices is sorted. The only thing not sorted is France moaning about everything. So today we've got a little bit of a, well, I'd say a little bit of a stand back on things. You know, the market's, you know, having a little bit of a pause, taking a breath.
Yeah, so book squaring ahead of it. I did want to show the Aussie. Blake showed this formation yesterday. And I asked him a few days ago, do you think that we could get a rally to 76? It's looking more likely because you have this little head and shoulders that Blake pointed out. We're right at the neckline. So something I'd look for is if we get a good number and the dollar rallies, you know, the dollar made new high when the dollar was making new highs. Aussie held at 78.6, which is different. It would normally make a new low, like Euros made a couple successive new lows, whereas Aussie hasn't. I know that. I think the members in members chat were taking advantage of short Euro Aussie or long Euro Aussie. But anyway, Euro weak. But even the Euro being weak down here, I think that if we get a new low now, I know there's targets much lower, but I might even be tempted to try this at new lows because, you know, we have a 1, we have a 2, but why buy the weakness? Why not just go with the strength? And right now I have it diagnosed as Aussie. Yeah,
we were looking at this in the chat room this morning. You know, we've got another move up here at 73, you know, just looking at the short-term basis. You know, it's been knocking on the door for several days now. But even if we get above there, we still need to clear sort of the 15-20 mark. I know Blake's got something up at 25. So, you know, put it in the mix. We need to get above there. Otherwise, if we don't, then this is just another false break and potentially we're heading lower. But the 72.20.
Yeah, I mean, you could draw the neckline. I could move the neckline up to today's highs. You could do it.
Yeah.
Do whatever you want with it. You know, if we had a pullback, say, you know, 40, 50 pip pullback tomorrow after the number, and, you know, we haven't had a strong surprise in a while. Most of the surprises have been weaker than expected. Maybe we get a stronger number tomorrow.
Yeah, but I think with the ADP yesterday was quite strong, and you know it's not people look at the ADP and then the NFP comes in different, and everyone slags off the ADP, but that would have put a bit of calmness in the market. You know, if it is a good number or roundabout expectations, I don't know if we're going to see much of a dollar rally because, like Blake's been saying, like we've been saying, the taper's priced in. It's only going to take real bad numbers to change the picture going forward.
So whether we do get the taper making the Fed hesitate,
so you know you got to think, well, what's the upside to a good number? It's not the Fed tapering because we know that's coming. Okay, maybe we start to see some modest rate pricing, but I think we're a long ways away from that.
This is 10 years definitely been choppy. You know, I drew this line and it looked like we had a breakout here.
Yeah, exactly. And here we are again.
Here we go again.
Yeah, you think you want to run, and you know, then we are back below the recent highs. Although it is, you know, that is a good signal that they took out the highs and made new highs, because it's weakening the roof, if you like.
Yeah, you know what? Screw that line.
There's your technical analysis lesson for today. If you don't like it, screw it.
yeah. You know what? Remove it. If you don't, if it's bugging you. Anyway, that's what I teach along with my cursor technique. So anyway, guys, who else is in the house besides Ryan and me? Is Stelios has been globetrotting and on the ocean.
Setter.
He's still on the
I'm
ocean.
here.
Yeah, he's still looking at his tan.
Oh. I'm here, and you know what? I was just sending out a tweet regarding that
Aussie?
well, about the Euro Aussie, but I want to talk about the Aussie dollar for a second.
Go ahead, man. Grab the
that
screen.
that inverse head and shoulder pattern is not going to happen. You know how I know that?
Why?
Because the guys at Daily FX are on the case now, so I'm going to fade them.
Okay.
I'm just kidding. The fact of the matter is, I know we were talking about this yesterday. Actually, the last couple of days it was here. Let me just get over here real quick. I was just referencing this Euro Aussie, which should find some support right here at this 127% extension, which makes sense, especially if the Aussie finds some resistance here. But Ryan, he posted up today and he's like, hey, Ryan, we can talk about this. How many times are we going to knock our head up against this resistance today? And I've funny thing is I've actually noted a lot of, and I'm not exaggerating, I've seen a lot of people actually looking at this chart right now. And the problem that I always have is that when too many people are looking at a one chart, I tend to, I don't want to fade skeptical. It, but I get really skeptical. Yeah. And you know what else is happening? You guys were just talking about it. Like, Ryan, what's happening tomorrow? Non-farm payroll, right?
Yeah.
I mean, you got NFP tomorrow. So, I was just telling the people in the chat room, because the stock market had a nice bounce. I mean, we have, and actually, I didn't expect us to break higher. When I got up this morning, the first thing I do when I roll out of bed, just so you guys know, I don't kiss my wife. I don't kick my dog. I'm joking about that, guys.
Your quotes.
I look at my phone, because it's dark and I need a light anyway, but because it's 0 dark 30 in my house. But I need a light, and I want to see my quotes. So the first thing I do is I look at, kind of where the euro's at, because the euro is a good benchmark for me to kind of get a bearing where everything out. The next thing I look at is the S&P. And so when I saw the S&P at 4,400, I'm like, shit, excuse my language. I'm sorry. I'm like, shoot, man, we closed at like 4370s last night. When I was going to bed, we were trading in the 70s right here. And, we were at 4,400. I'm like, okay, so we got a little bump up in the S&Ps. And I knew that the 618's around here, but this is good enough, really, if you think about this. I'm going to take this trend line. I'm going to move it a little bit. So we're just enough above that resistance here. Oh shoot! You know what? I forgot to do this. We're just above that resistance here, just enough to probe the 618, probe stops that of traders that were short from yesterday. And hey, if we get a reversal here, I wouldn't be surprised. And I was telling the guys and gals in the chat room, I'm like, I think we might have seen it. This is it. Going into NFP, I expect the markets to moderate a little bit. Because no one wants to get overly positioned one way or the other ahead of what they would expect as a key number. I don't think the non-farm payroll is going to be as big of a number tomorrow. I don't think it's going to be as big of a deal. Just because like I told you guys the last couple of days, I think that people are going to buy dollars on dips, even on a weak number. And if it's a good number, the dollar is going to rip. So it's like, I kind of know what to expect. Therefore, I don't think it's going to be we're going to get a huge surprise unless it's an outsized number one direction or another. That's always the risk. But, I think if anybody's, bullish equities, or, they've been playing this bounce, they're probably like, okay, let's pare back a little bit this morning as North America opens. Let's take some off the table. And, if and you've probably got shorts that have been, kind of covering going into today. So anyway, so with that being said, that's kind of what I'm expecting with with the markets here. And therefore, I think the dollar might have seen its, I don't want to say it's low, but I think of its low of the day, especially if you take the euro. I'm a little irked this morning. I got up and I put an order to sell the euro dollar at 157.75 overnight, because I was hoping we'd get a push above the highs. I was hoping for this move. Let me go to a 15-minute chart. I was hoping for this move, but I was hoping for it to reach, you know what I mean? Like reach higher into resistance. As I think we're flagging here, I thought we'd just, kind of spike up and, take my order and then reverse. It didn't happen. But I do think like the euro is a flag and a flag. We got a bear flag and a bear flag right now. So, I have to be, pretty frank here. If you're short the dollar, and you're expecting some continued dollar weakness, you're probably looking at the euro dollar right now a little worried that this is you might be asking, oh my gosh, is this it? Is this all we're going to get? You know what I mean? So because that's not much of a move.
So you still offered at 75?
No, I didn't. I still have an order out there. I'm probably going to end up canceling it here, but yeah, I have an order at 75. It's been there all night.
Okay, well, I'm going to stick mine in at 74 because I'm long from 35. So I'm going to get in front of you.
You know what? And I'm sure, well, that, and that's the psychology of, people, right? Of traders, right? And I try to, let me see if I can illustrate this for a second here. Let me go over to a chart that it's not, what is that? This must be one I was drawing on at some point.
You can make a market, the two of you guys, so you can avoid spreads.
Right, exactly. But you get people like me that are like, okay, I want to sell like at 75, right? And then you got Ryan here that goes, yeah, well, Blake's selling at 75, so I'm going to sell at 74. So I'm going to put my order in right here. And then you got, everybody else like, you know what, I'm going to sell here because this is previous support, current resistance. I'm going to give it a little bit of room over here. And so what happens is you get orders stacked up, in this area because, you got people in my frame of thought, I'm going to sell on any spike higher. So give me an order here. You're like, well, I'm going to, and then, you got Ryan going, well, I'm thinking what Blake might be thinking. He's going to have an order up here. So I'm going to get in front of him. So I'm going to stick my order to get out of my longs here. And then I'm going to go ahead and, if, some other, somebody that really wants to be positioned long dollars because they think the euro is going down to 112. They're like, I'm selling any type of, rally into previous support. So I've got orders stacked over here. And when you get all these orders stacked, that's what slows the momentum of the, price. And that's why price, you start to see these long wicks because people's orders keep getting hit. And that's what creates them. But the fact that Ryan wants to jump in front of my order really pisses me off. So I'm going to actually adjust mine to 73 right now. I'm just kidding. I'm joking. I'm totally joking. But Ryan's not the only one in the chat room. I was just looking in our chat room right here. You even have like Amanda. She's still long some EU. Yeah, she's long some euro, US dollar too. And, that's the thing about our chat rooms is we, like Ryan here is playing counter trend. I'd rather be on the short side. I'd rather be long dollars, but that's how I'm approaching the market. But you look at Ryan and he's been long, euro dollar since yesterday, and he's playing a counter trend bounce. And that's the beauty. Well, that's the beauty A of the ForexAnalytix chat room, but B, that's a beauty of being a trader is you can actually, you can trade and take advantage of either direction. And especially right now, like, I was having this conversation with one of the traders that came over with Ryan's group at Forex Flow Live when they merged into to ForexAnalytix. And I was talking with this gentleman, Steve, and I was like, we were talking about being long dollar Mexican peso. I started buying some dollar Mexican peso and I'm spreading it out with, long some Euro Mex this morning. And he's like, yeah, sometimes I just stick with trades because I'm stubborn and I don't want to, I don't want to get out and it ends up being a problem. And I totally get that. And you know, when that becomes a problem, and when that has been a problem, is when you're in a one-way market. So we've been in a one-way market for so long that people have a hard time, myself included, we all do. We have a hard time sticking with trades with conviction because we've been run over so many times over the last, let's just call it, minus the COVID move. You know, you kind of got to dismiss that 2-month COVID.
Not even 2 months.
Yeah, a month and a half COVID move. You kind of got to dismiss that as like a black swan, B, you know, kind of like just an anomaly. Obviously, no one was expecting it. But the fact of the matter is, we've been in a one-way market for so long that we've been run over just by trying to have conviction, especially going opposite directions. But the good thing about like the last few months is we're now starting to see some two-way price action, and that's good. You know, that gives us all opportunity, and you got to remember that the market's shifting. So your the way you approach the market has to shift as well. And I, just like anybody else, you know, I have a hard time with that. We all do. You know, traders get Pavlovian type of nature to them, and they're like, you know, oh, you know, there's food should be coming soon, I'm going to start drooling. But you know, the fact of the matter is, markets are ever changing, and you know, we have to kind of adapt to them. And right now we're adapting more to two-way price action. So anyway, I hope that that little thought process helps out. So hey, by the way, I need to mention this before you know, before we go into just, you know, any comments from you guys. I just want to mention, if you guys haven't done the Forex Flow non-farm payroll competition, make sure you do that, because you guys that are listening in right now can win like a free month of
Ryan,
access.
can you post a link in here?
No, we're going to make people search for it, because they're just that we're because Ryan's
it's part of the game.
Because it's part of the game. This is kind of like Squid Game, but different. Has anybody seen that on Netflix? That Korean show called Squid Game? It's like all the rave right now. It looks pretty gnarly. I'm going to have to say that, and I'm going to leave it at that. Hey, so how do you guys feel about non-farm payroll? Ryan, you had some comments about non-farm payroll just a little bit ago to Dale, and I kind of missed that because I was just getting the webinar kind of fired up on my end. What are your thoughts about non-farm payroll heading into tomorrow?
Yeah, it's pretty much what we've been saying and what you've been saying the last couple of days. You know, the number really isn't going to matter unless it's horrendously bad. You know, the market's we've got the taper coming. The ADP probably calmed a few nerves, coming in quite strongly, even though we'll moan about the correlation if it's hugely different tomorrow. But yeah, you know, unless it's a hugely bad number, I'm not expecting the dollar to rally on a good number again, unless it's a big number. You know, if it comes in at 1 million or something, then fine. But if it's on or around 500k expectations, you know, probably between 2 and 700, then yeah, I think the dollar's supported, but I'm not going to expect any great pops in it.
Okay, that sounds good. Steve, you have any thoughts here? Good morning, Steve. Nice to have you here. I know you know it's challenging with your son's schedule at this time. Yeah. So good to have you here. Any thoughts on non-farm payroll as we head in tomorrow?
No, I don't have any thoughts, any different thoughts than you have. But in general, I said since near the end of last week that, in my opinion, the next few days are going to shape the environment here. We've seen this move lower in equities. We've seen this move higher in the dollar. But in my opinion, we're still in the precipice of making a move one way or the other. I can still read the move lower in equities as a possible, if you look at the S&P, as a possible bull flag. That would obviously mean that if we break higher, we should see more dollar weakness. On the other hand, we've seen the dollar break above that key resistance area at 93.50, and we haven't managed to break down below it. So, you know, in my opinion, short term, I remain neutral, and I expect to see which direction we go. We break higher in equities, in my opinion, then dollar should be continuing lower as well. But on the other hand, we keep on pushing lower in equities, then we should see more dollar strength. And in my opinion, neither of the levels I'm looking at have been breached. So perhaps tomorrow and the NFPs might be the catalyst for this to actually happen.
Yeah.
At least I'm hoping so.
All right. Thanks, Steve. I'm going to give you guys my conversation that I had with our traders yesterday during the daily roundup. So, go back about 12 hours ago, and this is the dollar index. Well, this is the dollar index 12 hours ago. So we were right about like this, somewhere in this neighborhood. And I'm, if you're a ForexAnalytix subscriber, you were listening into the daily roundup yesterday, we were talking about the bullish wedge that's developing in the dollar index. And the reason why this is so important is, one, if you were long dollars yesterday, you hopefully were cued on to the fact that we're up against resistance and we're going to slide back down towards wedge support, which we are at today. So one of the reasons why I do feel that the dollar has reached the low of the session is because I had been looking at this wedge pattern, and it might go just slightly lower than where we went today. But remember, the wedge support comes in, so not far below today's lows. And like I said, I might be off here. I mean, we might have to adjust that and trend line and go like this by the end of the day. But what I felt was yesterday is we're going to be in this consolidation going into non-farm payroll tomorrow. Now, why is this so important? Because it is setting up as a bullish wedge, but it's not so much that it's a bullish wedge, it's where it's setting up into. So the reason why this is such an important level in the market, if you haven't, figured this one out, I even tweeted about it yesterday. The dollar index is at the 38% retracement of the COVID move. This is a determining factor whether the dollar index is going to shift from being bearish following post-COVID. And this is a big narrative. You think about COVID, think about last year, and think about people's attitudes. Oh, and Richard said, I remember you saying that in the Morning Edge. Yeah, I talked about it both in the Morning Edge and in the Daily Roundup yesterday. Those are the ForexAnalytix subscriber videos, by the way, for the subs. But anyway, going back into the dollar index, the reason why this is such a big deal is because the dollar index, if you think about the narrative from last year, I am bearish the dollar. Why am I bearish the dollar? Because the Fed is just putting all this liquidity out there and obviously ignoring the fact that other central banks have done the same thing. I'm just bearish the dollar because, it's not going to be the reserve currency anymore. And, all this spending is, it's going to demolish the dollar. And, that's the whole narrative. I'm obviously being very exaggerated at this point, but you get what I'm saying. Technically speaking, that was a breakdown point in the dollar index right here at 94.75, and we've held it, right? That is the 38% retracement. Technically speaking, if you get above this 38% retracement, what happens is now the risks of a bigger dollar consolidation longer term is quite high. And then, we end up being in a more consolidative type of pattern. It kind of throws off the bear narrative, because if we can hold the 38% retracement, the risk is that the dollar does, trade into new lows moving forward. And I think a lot of it has to do with where we're at and pivot, and it's going to shape, you'll find out in the next couple of weeks, it's going to shape people's narratives on how they approach the dollar. And I think this is very pivotal where we're at. Do I think that tomorrow's number is the end all be all for the dollar? I don't. I actually think the dollar is probably going to end up being bought on dips, because we know what the Fed's doing. We know that the Fed is going to be tapering. So in my feeling is eventuality is going to be that the dollar is going to take out this 94.50 level. We're probably going to trade back up towards 96, 98 over the course of the next couple of months, and continue to squeeze the shorts out of the dollar. Now the risk is in my opinion, is that we have a really crappy number tomorrow, like well below expectations. And then, the jobs picture continues to turn a little bit worse. And we have inflation that starts to subside, but is still stubbornly high. And, the stagflation fears start to really, take hold. But anyway, that's neither here nor there. What I'm trying to point out is that this is very key resistance. And we do have a nice bullish wedge right into that 38% retracement, which happens to be hidden right here at 94.40, right? That is ginormous resistance for the dollar. So I think it's something that we all need to be paying attention to. So Ryan, did you get out the information for the non-farm payroll thing? Because I'll tell you what, I think my number was 667.
Yeah, someone stole Stelios's 666.
Yeah, I know. Well, that's what he gets for being swimming in the Aegean Sea somewhere.
You want the
thing.
link to you want the link to that post, do you?
Yeah. Alexander said I don't have the link for that. And Raj said mine's at 666.01. The thing is I chose a high number, so you know what number is going to come out. We're gonna lose like 100,000 jobs tomorrow because I'm usually on the opposite side of those guesses. Anyway, Steve, any final thoughts before Dale takes it over with the goddess of grain today?
Not really. Let's hope that we get something that moves the market tomorrow.
Yeah, let's do it. I'm in. All right. So, hey guys and gals, Dale's going to take it with the goddess of grains, and I want to thank you all for. Yeah, thank you all for tuning in today, and we'll be live tomorrow for the non-farm payroll. So make sure you're back here tomorrow joining us live, and I'm going to see you guys. I'll see you guys on the face or the morning edge here in 45 minutes.
Okay, thank you, team. Welcome back, Angie. How are you?
I'm good. How are you?
I'm great. It's very nice to have you. I want to talk about what you see going on, and let me just see if I could get my charts up here. Okay. Can everyone see cash wheat up here?
Oh, look at wheat. Isn't it beautiful?
Okay. All right. So, Angie, I want to talk about what's happening in the grains, talk about China, and also talk about I received an email from you, and you have started something new. And you know what I really liked about the email is you said in the email what you were doing prior, wasn't exactly a great fit for you, and you did your best, but it wasn't really your wheelhouse, and that you're doing something different now. So can you tell our audience about what you were doing and why you made this adjustment to, I believe the name is Consus of your, there you go. We're going to make a nice commercial for you.
Oh, so, I appreciate it.
All right.
The check's in the mail, Dale.
So what's the difference between what you were doing and what you're doing now?
Yeah. So my career has always been heavily involved in working with farmers and helping farmers kind of establish what they can do to better market what they have, what they're producing. So, a farmer, it's always been kind of one of those things where the farmer always buys retail, sells wholesale, all of these things. And so, we've kind of had that overall struggle, right? And when I first started about 16, almost 17 years ago now, the farmer really didn't spend a ton of time learning how the commercial side of the business traded, how the elevators, those big elevators across the country with steel bins and concrete bins and everything, what they did to really kind of make money. And there'd always been a bit of a mystery that had surrounded that part of the industry. And so when I started, one of the things that I really wanted to do was educate the grower and do all that I could to really help the grower trade like an elevator, work to do all that they could do to really understand how to maximize the storage. And so what we've seen over the last 15 years, 20 years probably, is that on-farm storage has increased exponentially. The farmers kind of recognized what was taking place in an overall standpoint, that he or she was stuck to a certain extent without any power. They just would deliver grain at harvest time and have to take whatever that price was. And so for us, one of the things that I've really pushed, or for me, one of the things that I'd really pushed was helping to teach the farmer how to do that, how to do those things. What is it that the elevator does? And so midway through about 2011, that was what I actually had done, was transitioned into managing a commercial facility. I had 5 elevator locations that I was in charge of, but I also really still had this passion for working with the farmer. And so I was really stuck in this sort of ethical quandary as time went on, that, I was teaching the farmer all of the ways to a certain extent to make money, or that the elevator was making money, and my salary was being paid by the elevator. And I just got to where I felt uncomfortable. Yeah. Like I wasn't, the person that I was working for was the farmer, which you can't fault, but the person that was paying me was the elevator. And I just wasn't performing to the level that I should be, or if I was able to
I think you actually used the adjective that you sucked at it.
I did.
In that email,
I just wasn't making.
There's someone looking in the mirror,
right?
And
exactly.
reassessing. Okay.
Yeah, and so I wasn't making the money that I needed to for the elevator, and I felt it was just best that I step back and communicate with my growers the different way that we could approach this process, and so we established this. And about a year ago, I had reached out to a friend of mine that was doing the same thing, on his own independently in the Southeast market, and I said, let's start a business. And he's like, doing what? And I'm like, stuff. We'll figure it out. And we met a gentleman that's huge into regenerative ag, also very independent, also looking to help the farmer. And so we've teamed up and we're just kind of seeing where we head. But so far, it's been very well received. And I look forward to continuing to educate, not only the farmer, but maybe some folks on the outside looking in that want to learn more about how ag in the world, is traded.
Okay, Angie, I really wish you all the success in the world, and it's not always easy to reinvent yourself in the financial arena, the agriculture, whatever arena. So
yeah,
I'm hoping this is a great fit for you and your business expands like a mushroom.
I appreciate that. So far, so good. So let's talk about what's going on in global grain trade.
Let's talk about China, which is one of the biggest buyers on the market the last several years. Is it true that China has stockpiled over 50% of the above ground grain that's available? Do they have that large of a stockpile from what they've been doing over the years?
Yeah, I mean, according to the USDA, they have for quite some time. Last year was the first year that we actually saw a significant reduction in what we perceived as available supplies. And as a result, we saw China really ramp up, everything they could get buying of everything that they could get their hands on. First, it started with
has that changed with as things have changed more towards free markets to G markets. Hey, that rhymes. Free markets to G markets. Has that changed with them deleveraging, and they wanted to tamp down on commodity prices, which means they want to buy them cheaper? Has anything changed in China with the problems they're having internally now?
Yes, we've definitely seen what I would call a substantial slowdown in purchases made by China, both for corn. The last corn import purchase that they had made flash sale wise, I haven't had a chance to dig through this morning's numbers just to make sure they didn't show up as a corn buyer. But the last purchase that they made that was really noteworthy was in May. We did get a release from the USDA attaché there in China yesterday stating that corn imports will probably drop 10 million metric ton from this year or this past year into next year, which is a pretty substantial drop. And we have seen some struggles with soybean crushers there being limited on their ability to crush beans due to the reductions in, the electrical or in the electricity that's available to them. So we have seen, some pretty substantial slowdowns there. In soybeans, it's especially most obvious. Now, we had Hurricane Ida that we had to deal with. It managed to go right up the gut and hit every New Orleans export facility we had, basically. And for a minute there, we were shut down.
Weather contributing to supply chain issues.
Yes, and you're seeing it with some of the values in fertilizer here for fall stockpiling in the U.S. and some of these other things. Is just that continuation of weather. And so with Ida hitting, we saw a big impact in our ability to ship, but we're still not seeing the sales pace indicate that we really are struggling with anything. The sales pace is lukewarm at best compared to a year ago, and currently, one could estimate that soybeans have managed to go from incredibly tight, inability to really kind of meet the demand. There was a concern there that we would see us slip well below what would be considered pipeline minimal levels of soybeans, and now suddenly we've flipped that. We managed to ration some demand. We saw the Brazilian crop come in larger than anticipated. We're looking at next year's crop possibly coming in larger than anticipated. And you can see there where we got a USDA surprise.
Okay, so this was USDA report. Okay.
Yep. Yeah.
And it was most negative for beans.
Mm-hmm.
Obviously,
we saw a
right?
significant increase in available supply in soybeans that we weren't anticipating to see.
All right, so this was the same one for corn,
Similar.
but corn has held the report low while beans have taken it out. Was wheat included in that report? Because I don't see any.
No,
unless this was a day.
Yep, wheat actually got a bullish
it rallied.
USDA number. Yeah, yep. So wheat's what's held corn's head above water. Obviously, too, in corn, there's some concern with the cost of fertilizer, as I said, the lack of available supply, and some concerns over what that looks like with China, basically doing all they can to keep their fertilizer that they produce, which they provide the world 30% of its phosphate, and they're going to try to keep that domestic or limit who they export into. And so we are seeing this kind of continuation of these supply chains or available supplies being caught up in these pinches, and it is impacting grains. Wheat has a different story.
Wheat is a strong sister. It's really the leader. And why is that? Because of our crop or the winter crop, or globally? Could it be maybe Australia not having a great crop?
Australia, it looks like they'll produce a decent crop. Most of what's going on in wheat is we did see the Canadian prairies struggle with drought. We've seen their crop basically cut in half in the northern plains. Like the spring wheat crop basically couldn't catch a break anywhere, whether that was in the Black Sea or the Canadian prairies or the northwestern portion of the Corn Belt. And so we did see, a significant reduction in available supply due to weather and production issues. And we're currently still trying to wrap our arms around what Russia's going to do. Russia last year introduced an export tax, and they've been using that, to kind of throttle back, how much wheat they pour into the global supply. And right now, there's a big question as to how much they will export in the year ahead. And that number, could range up to 250 million bushels worth of difference, which is pretty big. And so wheat's going to kind of continue to trade relatively strong, just simply because we're not going to alleviate any of these global sort of pipeline pinches, anytime in the next six months at minimum. Now, Russia.
Well, why doesn't the Fed just print some grains?
They
can't do that.
If only it worked that easy, right?
Yeah. So, Angie, are we coming up to some type of normal seasonal low in October? Is there a traditional harvest low, and for which crops in October?
Yeah, typically you will see soybeans, especially, put in a low early on in the month. And some folks would argue right now that that's, You look at that 1235 range there. I think we dipped down to 1231, traded back up above it, tried to get back up into that 1255 range, give or take, and it failed. Soybeans from a seasonal perspective should see some level of support come in, just simply because we do tend to see that harvest low early. We are running a bit behind, I would say, in the South when it comes to harvest. And so we may continue to see some level of what we call harvest pressure, which is the farmer selling and the elevator hedging, so they're shorting the board in order to protect their physical inventory and their futures risk there. So we may see some continued pressure, but at this point, from a seasonal standpoint, we do tend to see the lows get established in the early part of October, and then a little bit more in the way of some trading once we get comfortable with what the crop looks like. Right now, we have a bit of a wild card looking into next week because we have an updated supply and demand number. And so we'll start to see some more objective yield data come in, actual field reports and things of that nature, to give us a better indication of what we're going to see from a production standpoint. And that could really set us up more so than anything else, from a directional standpoint. Obviously, when I say more so than anything else, that's hinging on the fact that we don't see a continuation of energies going into outer space. Any sort of spillover exuberance there, tends to really play into soybean oil, which helps soybeans, and plays into ethanol, of course, and gasoline, which helps corn, and then wheat's in its own world anyway. So wheat's going to just kind of maintain lofty expectations until we see something change, substantially from a global standpoint.
Ethanol use increasing, decreasing, with EVs on the horizon, not going to be necessary. As the market's starting to look at that ethanol could go to the, garbage can of
the wayside there.
Energy, energy source.
There's been that conversation. And we've seen some conversations too, some uncertainty over what the Biden administration is going to do with their RFS. Their EPA has a level of influence on blending requirements and whether or not we're going to alleviate some of, we had a couple different refiners take a gamble in 2020 and into 2021, that the administration would kind of alleviate some of their requirements to meet blending standards with the RFS. Rumor has it that they will allow that, and that could have set some precedent for what we see going forward. But right now, EVs on the horizon, definitely you aren't going to see much in the way of a increase in ethanol production. We haven't had a new ethanol plant come online, and I don't know how long. But we are seeing biodiesel or renewable diesel keep folks attentive as to what's taking place from a soy oil standpoint, more than anything. But
a strong dollar, dollar's been pretty resilient all year. Has that played a role in depressing prices at all?
No, we seem to, maybe it's played a role in keeping the exuberance away from a rally standpoint, but I don't think it's done much. It hasn't hurt exports at this point in time from what we've been seeing. We really don't want to export wheat anyway, and the dollar tends to have a bigger influence on the wheat market than anything, and that only tends to happen if we have plentiful supply, which we don't have. And so I think right now, most folks are really just kind of ignoring what the dollar is doing as a whole. Though, like I said, if we get to where we feel like we're comfortable from a supply standpoint, then it can become a bearish indicator, like, prices are weaker today because the dollar was stronger. But so far, no one's really spent too much time talking about the influence of the dollar since it turned around here a couple months back.
Well, we've had pretty nice sell-offs, and just technically, it looks like just, corrective action on the decline in corn and beans, except the beans, I'm sure there's some people talking about a potential head and shoulders top that we broke right here in beans that could take them down to 10. Just a measured move. Do you think $10 beans is a possibility? Is a chart forecasting?
I'd say from both a fundamental and a chart standpoint, that would be something, that we have tremendous concern about, and something that we're looking at as to how to manage that risk, because I do think that's a pretty substantial exposure for a lot of my customers as we look ahead.
30%.
Yeah, it's a huge hit on return on investment, obviously. And so there's a lot of conversation due to the reduction in available fertilizer that we'll see an increase in soybean plantings too. And so one of my biggest arguments with my customers is, if you're going to increase soybean acres, make sure you're hedging these types of prices as well, because, based on what you're saying here and what we're seeing on the chart side of things, combined with what we could see from a fundamental standpoint going forward, we definitely could see soybeans go from the darling of the market here not too long ago to, the guy out front that no one wants to make eye contact with.
I know we have a question from one of our attendees. I know it's, geographically, there's, I don't believe any cotton grown in the Midwest, but we've had a very dramatic bull market in cotton. Do you have any comment on it?
Yeah, I mean, cotton kind of went higher and then fell off. It didn't really do the whole let's put in new highs since 2008 thing that we saw some of these other groups do. Cotton, to a lot of what we've seen, or a lot of the struggles that we've had, has been with what China is going to do. And what we may see from a demand standpoint, or even an export standpoint there. We did see some production reduction in available supply here as well, thanks to the higher prices elsewhere. Cotton didn't respond to the market. The cotton didn't provide market indicators to the farmer to get it planted. So we have seen some reduction in overall supply there as well. And really, a lot of folks will tell you that it's almost just become the natural gas of the commodity, the sector, right? I mean, just look at it. And so some will say that that's not necessarily even managing risk. There's some complaints farmers have, that because that market's so heavily inverted, that the cash traders that they're working with are forcing them to price off from the next month in line versus the front one, just simply because of the volatility that's taking place. And so, to a certain extent, cotton is somewhat of a thinly traded market. It does have a bit in the way of a more bullish story, thanks to the reduction in supply and potential changes in some of this demand going forward.
Looks like polyester will make a big comeback this winter.
Right. I'm looking forward to seeing you in a leisure suit.
Men will be buying leisure suits.
Yeah, exactly.
Oh, see, you remember it. You made that.
That's right. Yeah, I'm going long leisure suits right now. So yeah. I mean, I think eventually what you'll see is everyone will kind of recognize that cotton's turned into the Wile E. Coyote market. You know how Wile E. Coyote'd run off a cliff, and until he'd look down, he wouldn't fall. And I think that's where we're at. I think eventually you'll see a pretty substantial correction there. But when that happens is the $1 billion question.
Also getting a question from Anthony that jet fuel is going to be palm oil is going to be used for jet fuel.
What you're looking at there is that's that renewable diesel that we were talking about, soybean oil and some of that. And so that's the concern that we have there is that you could see a pretty substantial increase in overall demand in that regard. Now, I struggle with that. It's been introduced by certain states. It's more of a state-run thing than anything. I really do think we struggle to see, if we do see this continuation of high food costs, I struggle to see us putting it into jet fuel. Although we are seeing a pretty substantial increase in crushers. We are seeing crush plants come online, and if we do see a long-term reduction in export demand from China due to an increase in Brazilian production, we'll definitely want to be able to offset some of that loss in exportable supplies with, an increase in crush. So there's going to be some room there, but it's definitely going to be one of those struggles, because soybean oil truly is a food. We always used to argue about that with corn and ethanol, and corn really isn't something that you can convert. I mean, you can, but it's corn syrup, or it's corn, sugar or something of that nature. And so, that's part of the reason we've seen palm oil trade to all-time record highs, right? Soybean oil has helped support soybeans. And
I've always been against converting food to an energy source.
Yeah.
because
And
it
so that, I
seems
think
like
we end up
there's,
struggling with that a little bit, as
yeah,
time goes on. I think it works to where there is a point that we price ourselves out of that market. But
right.
for now, with the feeling that we need to increase energy supplies and whatever it'll take to make it a clean renewable fuel source, I think you see some continuation of strength in all vegetable oils for that reason.
So even though we've had pullbacks in corn and beans and not so much wheat, do you think that it still has the makings of an ongoing bull market, that once this beans find whatever level they need, or corn, or would you be buying pullbacks and looking for buy points if we're going to have an ongoing, commodity agricultural bull market as expressed by DBA? I know I've been showing individual grains because you're on, but
Yeah.
all we've done is consolidate since
Since the start. Yeah,
yeah, move sideways.
I think any sustained move to the high side is going to be entirely dependent on what takes place in Brazil or South America
Okay.
as a whole. We see
Okay.
another reduction in expected production out of there, due to a change in production conditions or weather or something of that nature, when it comes to corn, which really isn't going to be something that we're going to focus on until January into February. If we see a production problem arise there, then all bets are off to the high side. If we see things
Okay.
come in as we're anticipating, I mean, we're looking at replenishing the world supply, with upwards of 1.5 billion bushels difference next year versus this past year, which is huge. I think until we get confirmation of that, though, we remain in this consolidation pattern. I think corn and soybeans and wheat, I think wheat continues to maintain support, at that $7 range on the Chicago side of things. I think corn in the meantime maintains support around that $5 range. Soybeans will probably be able to keep some level of support just simply because they're tied so closely to everything else. And so we
Yep.
can't let ratios get out of whack, or you have a lot of carryover problems into next year's production. But I think soybeans probably, have to test that $12 range before I would feel comfortable saying there's a reason we could go long.
And the supply demand report is when, Angie?
Tuesday at noon Eastern.
Okay, and what are your expectations? Do you have any?
I think the USDA is going to come in relatively close to what we know that we're going to see carryout increase relatively solidly in soybeans. I think we'll see it come in, into that 300 to 350 million bushel range, which is more than double, or close to double, not quite double, excuse me, of where we were a while back. So those will be pretty substantial. I think corn's probably going to come in around 1.4 billion bushel, which is in line. I think everything's going to come in relatively close in line with expectations. And I think it's all stuff that we really know. Overall, we may have some surprises potentially with production, but at this point, based on what I've been seeing, I don't think we necessarily will. So I think the report will probably come in as expected. And then we'll really just try to pay attention to what on earth is happening out elsewhere in the market structure.
Okay, well, I am signing up right now with
Wow.
I'm creating I'm just going to do that anyway.
We'll
This is for creating the account. Okay,
Yep, we'll
so,
get you set up.
all right,
So
well,
I'll get you the VIP rate, Dale.
all right, thank you very much, Angie, and thanks for coming in here and sharing your views on the grain markets. You can't eat gold, right?
Yes,
Even though they call
exactly.
beans protein gold. And people are fighting over natural resources right now to keep their houses warm in Europe. Russia going to play any role? I mean, I know they have leverage on natural gas. You talked about what they may do with wheat, but
Mm-hmm.
I want to wish you good fortune on your new effort here with Consus, and hope that you help farmers who have probably one of the toughest jobs. You have to love it to do it, because
Mm-hmm.
everything's uncertainty. It's uncertainty when the planting, the growing, the harvest, and the prices you're going to get, and just all of those things are have to come together, and then, you know, you have a big crop, so does everyone else, and you don't get as much. And when prices are up, you don't have, you have a short crop, and when you could get good prices. So I really admire people that are risk takers, and people don't understand how much risk farmers take every season. And
it's for sure.
I
It's
respect
definitely a great
what they
industry to
do.
be a part of.
And I wish you all good fortune, good hunting, and prosperity for everyone that you work with, Angie. Thank you very much
Thank
for
you.
being here, my
Yeah,
trading warrior sister.
thank you
And
for having me. I always enjoy coming on.
Angie Setzer, you could follow her at the Goddess of Grain. You could bring your sacrifices to her, bring a bushel of corn, wheat, and beans before you meet the goddess. And thank you very much again, Angie. It was great chatting with you again.
Thank you.
Okay, so that's a wrap, everybody, and hope you enjoyed it. I think you need to keep grains as part of, if you're a believer in that inflation is coming, you're getting nice pullbacks in beans and corn, and use your technical work to find entries, because they can move a lot higher during this cycle. And you could join the team in 15 minutes for the morning edge. And remember, don't just count your beans and wheat and corn, count your blessings. And we'll see everyone pre-NFP tomorrow, and get ready to trade and react to the reaction. So that's a wrap, everyone. Good hunting the rest of the day. Adios. And thanks again, Angie.